are waiting for more people to join our webinar. So I think we'll wait for another 5 minutes, wait for more people to join. Then we are going to start our webinar today. So for today's topic, right, we will discuss about things regarding the non-farm payroll. Then after today, guys will have a brief understanding about what is non-farm payroll and how can we trade with the non-farm payroll. So I repeat, the webinar will be starts at 8:05 p.m. GMT plus 8 timing. So we wait for another 5 minutes, then we are going to start it now. Thank you, everyone. So welcome everyone once again. If you guys have any questions regarding of your trading strategy or certain products that you are not understand how to trade, how can we assess those fundamental and technical things, you can also feel free to type on the chat box while we are waiting for more people to join us. Thank you. So before we start, I think we're gonna have a small risk disclaimer for everyone. So please note that trading involves significant risk, and it's important to understand the potential risk involved before making any trading decisions. So by participating in this webinar, you acknowledge and agree to the following. So this webinar is intended for educational purpose only and should not be considered as a financial advice for you guys. So the information provided is general in nature and may not be suitable for individual circumstances. So this is the risk disclaimer for you all. Just remember for today's webinar is only for educational purpose. So I think we wait for another 2 to 3 minutes. Thank you. So as usual, while we're waiting for others to join us, if you guys have any questions regarding trading strategy, you can also feel free to type on the chat box, which is already prepared for you guys also. So just feel free to ask me everything. So, all right, I think without wasting any time, we are going to start our webinar for today. So for today's, right, our topic that will be discussed is regarding understanding the non-farm payroll. So after today's webinar, you guys will have a brief understanding about what is non-farm payroll and how can we use the non-farm payroll to do the certain trades. Then how can we use the non-farm payroll to do the certain trade, and then what is the purpose for all the trader, including central bank, investor, institutional investor, how are they going to analyze the non-farm payroll? And then just for information, tomorrow we will have a crucial US non-farm payroll data, and you can see that which will be released at 8:30 p.m. in GMT plus 8 timing. So we could expect there will be a significant movement after the data to be released. So please stay tuned to the data, and then please stay tuned to the webinar later. So, okay, first thing, this is our highlight, and today we will discuss about what is non-farm payroll, decoding the non-farm payroll, help you guys to further understand how can we use it to do the trade. And then we will analyzing recent data trend, means that we will try to analyze the previous data about the US job data, and how can we identify and how can we understand whether the previous US data can be influenced the future data. Means that we will try to use the previous US economy data to determine that whether the US non-farm payroll that will be released tomorrow should be come out with a positive reading or negative reading. And then we will try to understand the relationship between the non-farm payroll and then as well as the dollar. So after the data release, whether the non-farm payroll, whether the dollar is going to increase or decrease. So this is also another things that we are going to focus. And then we will also link certain things about technical analysis. We'll discuss about how the non-farm payroll affects dollar and then link to gold market. And then I can try to brief you guys to understand how can we use the non-farm payroll to do trades on dollar as well as gold as for now. And then we'll try to understand more on the NFP influence on monetary policy. So this is also another thing that we'll be talking about, because monetary policy should be a very important things right now, happen in the market right now, because global investor is likely to keep focus on what Federal Reserve, whether the Federal Reserve is going to increase the interest rates or not going to increase the interest rates. If you realize there are a lot of news after the news come out regarding whether the Fed is going to pause the interest rates or increase the interest rates, the movement, especially for gold, should be much higher. Okay, so this is the highlight that we are going to discuss for today. So what is non-farm payroll? So for this is a small explanation for you guys. So the non-farm payroll represents the comprehensive count of paid US workers across all business establishments. So this non-farm payroll should excluding general government employees, private household employees, employees of non-profit organizations, as well as farm employee. So to have to make it very, very simple, or to summarize it, non-farm payroll should be considered as a very important US jobs data. So the higher the non-farm payroll means that more people, more paid US worker already increased for previous month. So the better, the higher the NFP, the better the trend for the US dollar. Means that higher NFP, higher non-farm payroll means that more people to get paid, more people to get job, and then it will bring up to better economic prospect in the United States. So this should be cause the US dollar to rebound back. So this month, we could expect that economists actually expect the non-farm payroll will decline. Yeah, so it will decline from a previous reading of 253K until 180K. So we could expect that currently economists actually thinks that non-farm payroll is going to provide some negative reading. So it's not only economists think that so it's not only non-farm payroll that we are going to focus, but another data, which is the US unemployment rate, is also another thing that are very, very important for everyone to focus. So you are not just need to focus on NFP. Even NFP come out, even the reading better or worse than expectations, you still need to bear in mind on the US unemployment rate. These two data should be very important for the global investor to focus. Non-farm payroll as well as the unemployment rates. So these are things that we are going to focus on tomorrow to see whether this is very good opportunity for trader to trade. So to put it simple or to simplify it, currently, what is non-farm payroll? Non-farm payroll is actually the jobs data from the United States. Higher non-farm payroll means that more people get job in the United States. So the prospect for the better that the prospect for economy in the United States become better, there will be a chance for US dollar to increase. So and vice versa means that if NFP come out worse than expectations, like the economy forecast from previous reading 253K drop until 180K, worse than market expectations, then you could expect that economy prospect for US become worse and worse, then there will be a chance for the dollar to drop back. So it's different. So these are things that we need to focus tomorrow. So I think you guys have a brief understanding for why it's non-farm payroll. So remember, even though all those difficult explanation to it, but just remember it, non-farm payroll can consider as a jobs, important, a very important jobs data from the United States, which will be released every month, first week of Friday. So I'll give you an example. For this month, non-farm payroll is released on 2nd of June. So for previous month, May, the non-farm payroll will be released on the 5th of May. So the first week Friday of each month. So for July, there will be high chance for non-farm payroll to be released at 7. So this is the data that we are going to focus on. So this is a brief understanding, or this is a graph for you to understand if when the non-farm payroll reading come out better than expectations, it will indicate that the economy in the United States should be very strong. And then non-farm payroll better means hiring activity higher. So good labor market, good jobs market in the United States, then we could expect that consumer spending, because people get jobs already, so they will spend money, right? So you get job, you get paid, you get your salary, income, we should expect consumer income should be increased more. So when consumer income increase more, right, people have money, they are going to spend the money. So when they're going to spend the money, personal spending become higher, and then it will also link to higher inflation rate. High inflation rate will likely cause the central bank to increase the interest rate and cause the US dollar to appreciate more. So to more summarize it, you can understand as better NFP reading, more people get job, they become richer, and then they will spend more. When they spend more, the inflation is going to increase more. So high inflation is actually sometimes might good for US dollar, because when inflation is very high, then we are going to focus on what is the Federal Reserve going to say in future. So if the inflation become higher and higher, and then the Federal Reserve actually come out and say they're going to increase the interest rate to combat the inflation, then there will be a chance for dollar to continue extend its gain. This should be a quite difficulty to understand to it, but you want to more simple to understand is better NFP, more people get job in United States, economy become better, investor invest in US. That's it. It's like more simple terms to understand what is the non-farm payroll. So I can actually like let you look at the previous example of the non-farm payroll. Let's see. Actually, previously the non-farm payroll should be released on 5th of May. You can look at the economy data. Again, you can notice that the non-farm payroll for May, not this month, is for May, the previous month. Non-farm payroll, the reading is actually much higher than the market expectation. This is the previous data. And then the unemployment rates, both data is much better than the market expectations. Both US unemployment rates and then non-farm payroll, these two economy data, the reading is much better. Amal say your screen say you are sharing something, but I can't see what you are sharing. I think is anyone having this kind of issue? Or maybe it might be your internet issue. So as for now, can you see the screen? Now it's good, yeah? So I think everyone can see the screen right now. I think that might be some technical issue for Zoom. All right, thank you. I think we are going to continue now. Okay, so I think you guys have a brief understanding about what is the non-farm payroll already. Maybe I will show you the charts, the things that I'm showing you just now. So this is understanding for non-farm payroll. If non-farm payroll reading better than expectations, then we could expect the hiring activity should be increased more. So more hiring activity, consumer spending more, economy in US become better, so US dollar might increase more. So this is a small PowerPoint slide for you guys. And then now we are going to focus on the previous example. Like you can see that previous on 5th of May, the non-farm payroll reading is actually much better than market expectations. 253K, as we mentioned just now, right? NFP higher means jobs data, jobs market in the United States are very, very good. So investors invest in US because they thought that good job, good paying economy should become better, and include the unemployment rates. Unemployment rates, for your understanding, is people who don't get job. So people who don't have job are included in the unemployment rate. So lower unemployment rate means lesser people do not have job. So it's better for the economy. Means like lower unemployment rate, more people get a job more, so lesser people don't get the job. So same thing, economy become better because they get the job and become richer, they will spend more. So after these two important data from the United States to be released, and we can look at the gold charts. Like 5th of May, you can notice it like 5th of May. And then this is a candlestick pattern for the 5th of May. And you can notice that the price, I zoom in for you, like you can look at the 5th of May. After the data release better than market expectations, gold price is actually dropped quite a lot. Why does gold price drop quite a lot? It's because of appreciation of the US dollar. So you can notice that if we're going to focus on the 5th of May data, after the data release, it's actually increased quite a lot from here until here. So you can look at the candlestick pattern. So after that, you can notice that the next week, everyone try to react to the positive data and the overall trend for dollar from previously negative. And notice everything very negative for US dollar until after the data release around here, the trends for US dollar become better and better. This is a daily chart just for a kind of reminder. So normally, right, investors don't trade much NFP with dollar. They trade NFP with gold because if you are going to compare volatility or higher profits and including higher loss, of course, they will likely to focus more on gold because the movement for gold should be much higher compared to dollar. You can see that even though dollar NFP better, but it do not increase quite a lot, but compared to gold, you can notice that overall trend for gold is like really dropped more than 400 pips. It's a very significant movement. So this is a proof that after the non-farm payroll reading come out better than expectations, then the trends that we can focus on is gold. But you really need to very be careful on this kind of trade because even though sometimes the data come in much better than expectations, but due to significant volatility in the market, you might stop out first because before you experience some gain. You can notice that after the data, before the data release, right, all the movement is like move like around 100 pip already. If you are going to full margin to do all the trade, right, the chance for you to start should be very high. You can stop out first. Even you do sell order for gold, for example, you sell order for gold, you might stop out first because you can look at the candlestick, like even go out is already 50 pips. So you can stop out first and then it drop. And then you might gain from it. But because of your account lack of capital, your margin level are too low already, you might experience this kind of risk. So my advice for you, if you are really want to trade non-farm payroll, you need to open a smaller positions, of course, and your margin level should be enough for you to tank all those small fluctuations because of course, before the non-farm payroll release, the movement should be quite high. And then after the non-farm payroll release, you can notice that it's more than 100 pips. So this is a risk that you are going to bear. For those who don't like risk, you can try to ignore the non-farm payroll and maybe you can trade on next week. But for those who really insist they like risk, they like high return, high profit, then you can focus on it. So this is the well proof about the non-farm payroll thing. So we currently this week, we will have another speculation on gold as well, but whether the non-farm payroll is going to better than the market expectation or not, we need to focus on the US data. So I already filtered out all the jobs data. So for you guys who are, if you are not sure how to filter out the economic data, you can try to open the investing.com. Then you can try to filter it. And you can notice that we do have a lot of different countries. So you can select US. Then you click the employment data, like 1 star, 2 star, and 3 star, and then you click apply. So after you click outright, you can notice that all the US job data will come out already. So you can try to understand, this is all the job data that might support bullish or bearish trend for the non-farm payroll. So if you compare all those economic data around here, even before Friday, especially later after 11 minutes, there will be a US economic data, initial just claim. So after you compare all this economic data, if most of the reading is showing green color or better than the market expectations, then we could expect that the chance for non-farm payroll to have a high reading or lower reading should be higher. So like example, if all the economic data now showing that US job market are very good, all the job market are green color, then we can expect that the non-farm payroll have higher chance to become better than market expectation also. So you can prepare for your portfolio tomorrow. So you can prepare for it. You can wait for the data or you can trade before the data. So once the NFP release and then it's really inside your expectations, then I just want to congrats you because you might have a good profits from it. But of course, you really need to bear in mind, sometimes even though all the data support non-farm payroll should become the reading should be better than market expectations. Sometimes the non-farm payroll reading will actually out expectations. For example, we have also experienced this kind of thing, right? Even all this US economy data, all the job data come out better than market expectations, but end up the non-farm payroll reading worse than market expectations. So this is the thing that the market volatility should be very, very huge. Like for example, everyone already expect that, because now recently all the US data become better. So everyone is going to sell gold because they expect that the non-farm payroll should come out better than expectations. They will cause dollar to increase and then gold drop. Everyone might be considered to sell gold even before the non-farm payroll come out. But once the non-farm payroll our expectations and then the non-farm payroll reading worse than the market expectations, you can expect that the movement for gold to rebound should be very, very high. It's like maybe 100 pips or 200 pips. So these are things that you need to bear in mind. So even though all these data support NFP negative, but it will only increase the probability only, but it's not 100% probability. So here's the thing that you need to bear in mind. But of course, it can also build more of your confidence because you can compare all the data before you really focus on non-farm payroll. So after you understand the non-farm payroll around here, okay, so you are going to look at another thing is what we call technical analysis now. So already, I think most of you already have a brief understanding about how can we analyze the non-farm payroll already, right? So focus on the jobs data, especially later there will be a lot of US job data to be released. Then we are going to try to speculate by using previous data, speculate on whether the non-farm payroll is going to good or bad. So after you understand the data, then you are going to focus on the analysis technical chart. So as we can look at the charts, I will recommend you guys to focus on H4 or H1 if you are going to trade on non-farm payroll. I don't recommend you to trade on 5 minutes because especially non-farm payroll, right? The market volatility, especially for 5-minute candles, should be very huge. Even sometimes 5-minute graph shows successfully break out above or below should not be a very precise one. So better if you don't want risk or you want to have a lesser risk, better you focus on the non-farm payroll data first. After the data release, if the data worse than or better than the market expectations, then you need to bear in mind not only non-farm payroll that you need to focus, you need to focus on also unemployment rates data. So these two things is the main thing that you are going to focus. Even non-farm payroll better, but unemployment rate worse than market expectations, then we could expect the volatility should be quite different already. But if non-farm payroll better and unemployment rate better than market expectations, then we could expect that the chance for gold to drop should be much higher. So after the data come out, you know gold is going to drop. Then what are you going to do? I don't suggest you to, after you look at the data, then you straight away sell the gold. No, you better look at the candlestick first. If even before the data release, if the gold have an early reaction, like already dropped 300 to 400 pips, means that you're already late. Then I don't recommend you to, I don't recommend, but if you want, you can. I don't recommend you to enter the market again because you might be too late already. So there will be sometimes market should be like this. But if after the data release, but the movement for gold should be slower and slower, then you might consider to do your trade. And then you can try to link support and resistance level over here. So I will now you can refer to this just a very small support resistance level for gold now. You can notice that overall trend for gold, right? Still consider trade within a huge range. And then one thing you should notice is currently gold is testing a crucial support level around 1955 around here. So how can we determine the support level is? You can notice that this support level, right, is actually tested a lot of time before already. Like you can notice here, after it tests, it rebound. After it tests here again, it rebound, test again and rebound. Then after it break below, it drop. Okay, so now you can notice that it's currently test again. Whether it will rebound or not, very difficult to say. So what I recommend you is maybe the charts will be different from today to tomorrow already, but you need to bear in mind, if you want to do trades for gold or before NFP, you need to patiently wait after the data release, and then if the candlestick successfully break up below the support level, then we can then we might consider to do your trades. Might consider sell after it successfully break out below the crucial support level. So after, for example, you can consider after it break out, you sell around here, and then you TP around another support level, 1935 around here. So when it's break again, then you focus on another sell again. So this is a H4 chart. So of course the movement should be huge enough already because from here until here, right, it's already 200 pip. And then if we break again from here until here, another 200 pip. So this is the thing that you need to be careful. But of course, not only sell, example, if the gold price already rebound and then NFP worse than the market expectations, then dollar will drop. When dollar drop, gold is going to increase. So if NFP reading worse than expectations, then what are we going to do? We need to patiently, of course, you can consider to buy around here support level, but for those who don't like much risk, maybe you can wait patiently because sometimes it might rebound, and you will keep retesting 1980, another crucial resistance level around here. So you can notice that 1980. If you are you're going to look at the previous chart, you can notice that I already circled down a lot of crucial resistance level previously already. So if NFP worse than market expectations, then gold might be rebound and then retest back 1980. And then the chance for you to enter trade is when the candlestick successfully break above the resistance level around here. So as for now, overall technical chart for gold should be quite precise. So after NFP release, better you focus on the resistance and then the support level. Okay, but of course, sometimes there will be a chance also like the non-farm payroll reading better than expectations, but the gold price do not follow the trend. Like even the non-farm payroll better than expectations, unemployment better than expectations, supposedly gold should be dropping, right? Because good dollar should be increased because good data. But sometimes, right, things will happen. Even this thing happen, like all the data become better, but gold do not drop, and indeed they rebound back. So how as a professional trader, you need to embrace with everything that happens in the market now. So what are you going to do? I think you must set a stop loss. I suggest you to set a stop loss, and then you need to protect capital. And then you need to bear in mind, your stop loss level shouldn't put it very near, because when a non-farm payroll happens, market volatility should be very huge. Market movement will be huge also. So sometimes your stop loss level might not be hit because of what we call is like slippage issue, and your orders are not able to hit your stop loss level because of some system issue, slippage issue. So this is a thing that you need to bear in mind also. That's why when non-farm payroll data is going to release, you better set your stop loss in far places, because if not, high volatility might not trigger your stop loss level, and then you might encounter more significant losses. So few things you need to bear in mind before the non-farm payroll. First thing is you need to look at the non-farm payroll data and unemployment data, compare whether it's better than market expectation or worse than market expectation. So first step, non-farm payroll data. So you focus on it. So after you notice non-farm payroll data better on or worse than expectations, then you focus on unemployment rate, whether these two data are together, the trend for these two data are together or not. So after you understand it, then you focus on the technical chart. So how can we do it? Is we need to focus on the support and resistance in order to sell. But sometimes you need to embrace even the significant market volatility. You need to embrace to it, even though data negative and your trend should be right, but sometimes the market should be out of expectation. So you need to bear in mind stop loss is necessary, and then your capital is necessary. The margin level you need to be high, because all the movement should be very high. Maybe 5 minutes already 100 pips for the movement. So you need to embrace all of these kind of things. So you need to protect your capital to prevent stock out, because even your trend are right, but sometimes just a small retracement, a small market technical corrections during the non-farm payroll, you are going to stop out. Then you are not going to experience a very good experience for the non-farm payroll already. Okay, so this is all the thing you need to bear in mind. Then of course you also need to bear in mind, and you need to focus on the US data today. So focus and then determine whether NFP will be better or worse by tomorrow. Okay, so I hope you guys have a brief understanding of the non-farm payroll. Now should be a Q&A sessions. Do you guys have any questions like want to ask me? If not, I think we are going to continue. So far, you guys can catch up, right? So far, no issue, right? If you need me to repeat something, you can also feel free to type on the chat box. And then after you understand the non-farm payroll, the reading is better than my expectation or worse than expectations, then we are going to focus on a longer term trend. So after you know whether the non-farm payroll is good or bad, then the next thing in future is we need to understand what is the monetary policy from the Federal Reserve, because Federal Reserve is actually going to look at the non-farm payroll and then to decide whether they are going to increase the interest rates or not to increase the interest rates. So for now, right, a lot of people expect that there will be higher chance for Federal Reserve to increase the interest rate already, like 25 basis points. So this should be quite complicated, but I will try to explain it in a very simple way. In order for dollar to increase more, we need to focus on the interest rates news. If the Federal Reserve say that they are going to increase the interest rate, then the chance for US dollar to rebound should be much higher already. So you need to notice after the NFP result come out, then we will have a Federal Reserve meeting, FOMC meeting already. They will decide the interest rate decisions, whether they are going to increase the rate or not going to increase the rate. And then before the FOMC meeting, before the interest rate decisions meeting, several Federal Reserve members actually will come out and give some talks on. So this is the thing that you need to focus on. So they might say that currently NFP, Nonfarm payroll, US data, US job data are very, very good. So we might expect in future we will increase the interest rate. Then this is a chance for dollar to continue to extend its gains already. And then means that gold will be likely to continue to drop significantly. So this is the thing that you need to be careful. Nonfarm payroll is just maybe you can trade with 30 minutes or 1 hour, but after the nonfarm payroll, how are you going to use the nonfarm payroll to strategize your future trading? So this is a thing that you might need to understand more. So after the nonfarm payroll, focus on what the Federal Reserve is going to say. Increased interest rates means that dollar might be increased because higher interest rates might attract foreign investors. So interest rate dropping means that dollar might be dropped. So if the Federal Reserve said that they are not going to increase the rate anymore, they are going to pause their interest rates, then this is a chance for dollar to drop. The dollar might drop back, and then gold might increase back. So I think if you guys are interested, maybe we will have another topic in future to talk about the interest rate relationship between the currency. You can also leave on the charts later if you are interested to more understand deeply to this kind of things. So now we might focus, you already have a brief understanding about the dollar as well as the gold trends for the technical analysis already. So now you guys have any like preference products that you need some information here, like fundamental analysis, technical analysis, I can try to analyze for you guys. Or if you guys have any Q&A sessions regarding the nonfarm payroll thing, you can also feel free to type on the chat box. And then just a kind reminder, non-farm payroll is not the main thing, shouldn't be the 100% focus thing now, because US currently is actually having a lot of different kind of issue. The first thing is regarding the debt issue. There will be a chance for US to default in the early June. And then this is the thing that you need to focus on, the default news for the United States. And then tomorrow, of course, the non-farm payroll. And then after the non-farm payroll, then you need to focus on the FOMC, the Federal Reserve meeting. So this is all those things that you need to focus as for now for the market trend. Have any questions want to ask? If not, we are going to end our webinar here. You guys don't have to shy. If there are anything, any products are really interested in you, or if the webinar are not clear regarding something, you can also let me know. I can repeat it. Don't have to worry about it. If you guys don't have questions, Jonathan Jake asked how to learn Forex as a newbie. Good questions. You have a few ways. It depends on your risk appetite also. Of course, as a newbie, you might some of newbie might very excited to all those profit, right? Like you gain a lot, then you are very excited, and during the next trade, you trade more and more and more, and then end up you lost everything. So as a newbie, the first thing, which is also I think for the most important as a Forex trader analyst, the first thing, most important thing is you need to maintain here. Now, can you hear me or Jonathan? Okay, so the first thing that our importance for Forex trader is, as for now, for newbie especially, is you need to have a good psychology control, emotional control. Sometimes, right, as a newbie, you gain a lot, then you will trade more and more and more, and then you lose everything. You will like that one. So of course, and then when you lost, right, you are going to deposit more and try to lose more and more and more. So this is the thing that you need to control. The first thing as a Forex for trader, for newbie, the first thing is, I think the most important thing is emotional control. This is the main thing. So after you can control emotions, you can trade with the lot size that should be quite comfortable for you. And then you can slowly move on to more things, like you can learn about the fundamental analysis, you can learn more about the technical analysis. So you can also ask your client relationship manager to teach you how can you learn it. But before you learn all those technical things, right, emotional control is the most important thing for all the Forex trader. Okay, so I think you can hear me now for Jonathan. any video can refer. You can actually refer to the PU Prime YouTube. We do have some forex video for newbie trader. You can also refer to it. Inside that video, might teach you what is lot size, how can we do trade, what is the margin thing, how can we analyze technical analysis pattern. You can feel free to search in PU Prime YouTube. Okay, good question, Jonathan. All right, I think I answered a question right for Jonathan. Good luck for your further trading journey. And then Yashin asked, any idea what individual industry would be affected by the new debt ceiling bill? Okay, actually this individual industry, right? I think the forex industry or forex trader like us, right, is actually going to affect us by it. Okay, it's going to affect it by it because if the forex trader, you are going to trade, most of the forex trader are going to trade with dollar related product. So if they are going to pass the deal or not pass the deal, then we might expect the trend for US dollar should be very significant, and then as well as the gold market. So if you're going to focus on short term, long term, right? In short term, right, as a forex trader, right, how can we affected by the new debt ceiling is we need to focus on the news first, because now the debt ceiling thing is already passed by the House. Now the Senate is going to vote it. So for your to better understanding to it, maybe I can search, let you clearer about how does this thing work? How does this thing work? U.S. Parliament. Good questions from you. Because this instead of non-farm payroll, this is also another important thing that market needs to focus right now. When trading stock, particularly so I will let you have a good storyline about it first, because for now, right, US is going to increase the debt ceiling, and then if they fail to increase the debt ceiling, US might be default. So once US default, then the US economy will become very, very worse, and then especially for stock market, right? Don't think there will be a good stock strategy once US announce they are going to default. So for example, now, right, the deal is already now they already agree to increase the debt ceiling. So if they agree to increase the debt ceiling, if you look at the news, you understand that if they increase the debt ceiling means that US is not going to default. So they already voting here. You can notice it. They already vote around here, House of Representatives. They already agree to it when they vote in here to increase the debt ceiling. But there are another door over here. You need to vote on the Senate level also. So Senate level, you need to make sure that majority of the Senate level are agree to increase the debt ceiling in short term. So if majority are agree to increase the debt ceiling, means that US is not going to default. US no default, economy prospect for US is very good, then I think the stock prospect should be very, very good. I don't think there will be a specific stock, but they will be quite good for the stock index, especially US stock index, because if they increase the debt ceiling, US is not going to default, then market might consider to shift their portfolio back into the US equity market because higher risk appetite, investor prefer risky asset. So in short term, you need to focus on things around here, Senate level. So bear in mind, House is already successfully agreed to increase the debt ceiling already. So US might not be default, but to 100% confirm, you need to wait for the Senate voting to it. So Senate agree to extend the debt ceiling, then US no default, then good for the equity market. I think most of the equity market should be benefit from it in short term. But in longer term, whether the US is going to default or not is another story that will be very difficult and might be a long storyline that we are going to discuss in future. Okay, did I answer your question for Yasin? For stock, yeah, I think mostly will be affected by the equity stock index. Stock index from PU Prime, you can look for it, like you can look at the symbol. You can notice that like we do have Dow Jones, Nasdaq, this kind of thing. So I think especially for forex trader, we focus on short term by short term first before we move on to everything. So for short term, the news that we must focus is non-farm payroll, of course, the topic that we're going to discuss today. The second thing is regarding whether US is going to pass its debt ceiling in Senate level or not. I think a lot of article might confuse you, but it's actually just voting, just past house level, then now Senate is going to vote. That's it. So if Senate vote successfully, agree to it, then US equity market might be better because of better risk appetite. Thank you. And then Shed asks, is it advisable to trade 5 minutes before the NFP? For me, I don't advise that, but if you like risk, then you can try because it depends on personal risk appetite. But for me, I actually don't like to encounter a lot of risk because I don't like to encounter a lot of risk. But if some trader they are very risk aggressive, you can try to trade before 5 minutes before NFP, because if you are correct, right, NFP is very within your expectations, then the gains that you are going to get is going to be very, very high. But of course, if you are wrong, then should be very dangerous for you. Okay, so if depends on whether you are new trader or experienced trader. For new trader, I advise you to monitor first. After the data release, better or worse, then you focus on the charts, whether it's successfully break out below or the resistance level. Or especially for first-time trader, I don't recommend you to trade during your first time NFP. So you can focus on it first. You can try to have some strategy that I taught you just now. Focus on the data, focus on economic support and resistance. Then you can try to experience whether this kind of thing is good or bad. Okay, but for experienced trader, they like risk, then you can consider to trade even before 5 minutes. Yeah, it depends on personal risk appetite, because like some people lost $5, they are very angry already. Some people lost $50,000, they have no feeling. So like it really depends on the personal risk appetite, because trading should be entertainment and be happy. Happy is a very happy thing. You don't stress too much in yourself in like just one trade, and then you're going to ruin your whole weekend. So for new trader, you can try to monitor first, and for experienced trader, then you can try to have your good. You can decide out the trading strategy for you. Okay. I have more questions. Thank you for asking all the questions and supports the webinar tonight. Okay, yeah. So if you guys don't have any questions, I think we're going to end here. So I hope the webinar is helpful for you, and good luck for your trading journey tomorrow. So I think, that's it for today. Thank you, everyone. Thank you once again for all your support. Thank you.